All right, folks, so we're here on the Trading Nut YouTube channel. We've just finished a podcast with Trent Smalley from Omaha Charts. He's just about to walk us through the strategy he dropped at the end of the show and the trade he's talking about here on the chart. And I can see it exactly what he's talking about and described in the show. So check that out afterwards. It went on for about an hour, and there's a whole bunch of insight into how Trent got started and how he uses volume profile in particular in his trading as well. So guys, go and check that out. But for now, over to you, Trent.
Yeah, so the one we were talking about, one of my favorite setups to take as far as a long trade goes, if I'm going to enter a long trade. Now, this particular stock here, I don't know when this will hit the YouTube channel. This might change dramatically because I know earnings it's in the next day or two. But let's just pretend there's no earnings. So this is a stock that I have been in for a while. Actually, I was looking at this it was like last spring when I finally entered this, and this is just a regular individual stock position. So what we have here is a strong uptrend into a sell-off that started, that kind of hit the markets last fall when we got that wave of volatility. But what this particular stock did, and I should highlight this by saying that this is in an industry group that has been very strong. It's part of the software industry, kind of the next gen Internet 2.0, kind of, if you will. So I had done a lot of kind of fundamental research on the company when I bought it. This is a longer term investment, but this is setting up perfectly for what I look for in a long trend. So in this particular one, which I have is a strong uptrend into kind of a cupping pattern here, almost textbook, and you're right back to that area which sold off pretty strongly last time and kind of built this base. So what I would look to do is I would get in here. This would probably be a trigger. I like to do, we're within 1% or 2% of the high that we reached last fall. And I would get in here specifying, taking into account, obviously, let's say it's an options trade, risk management. Generally for a full size account, I would go no more than probably 2%, 2 to 3% of the entire account into any options trade. This changes depending upon if it's an out of the money, in the money, which delta you're looking at. But I would look to get long. We're right about here because we are nearing the top, and I want to get in before the breakout. I like to anticipate a little bit that way. And I would set where we go wrong. So we got to know, it's always prudent to understand where am I, instead of counting the money I'm hopefully going to make, where am I wrong in this trade? So there's a couple things you can do. You can do it basically just on looking at, all right, so this is the weekly bar right here. Maybe I probably am going to think that something is wrong if price would get down below and close under 125. I mean, if we got down into here, that is probably enough of risk for me to look at the pattern again and say, especially if it's on heavy volume, you want to take into account the volume too. So if there's a big red candle here, comes down here and it's a volume bar like this or like this, I would probably look to circle out of the trade, keep it on a watch list and monitor it. Sometimes you will get shaken out of these. But you have to know going into it, what can I afford to lose? Maybe you don't want price to drop under last week's weekly bar at 130. Otherwise, if you don't want to go by kind of weekly candlesticks, you can do something, just put an individual, let's just use an exponential moving average. And we'll change this to, we'll leave it at a 9-day. So price did close under the 9-day, so we probably want to take a little bit more risk than that.
Do you want to zoom in a little bit so we can get a good view?
Yes, let me do that. Let's see here. I'm going to change this to make this bigger. And I'm going to use we'll give this a little bit more wiggle room. We're going to do, I'll make this bigger so you guys can see. We're going to do a 20-day simple moving average. And we'll make this a little bit bigger so you can see it. Okay. So maybe you can see that.
Yeah.
Now, we can see that the last time that price kind of handedly closed under the 20-day was back here at the end of December. And that was on a pretty fairly pronounced sell volume bar. But since then, since it kind of retook it back here, it has not gotten back under that 20-day for some time. So for it to, I would say there's a pretty good confluence here of this. Let's just say you want to keep a tight leash on this trade. You don't want to risk much. Maybe you're not as comfortable with this pattern or something like that. You want to keep a tighter leash on it. So there's a pretty good confluence here of, a couple of shadows being left here, kind of where this selling bar occurred. And then there was another tail left here right about at the 20-day simple moving average. So I would say if I want to keep this on a tight leash, if it got a close, under this, let's say it got back down to between 126 and 130, and it had some pretty significant volume, I might look to circle out of the trade there and just see if, maybe there's a big seller up in here, or, an insider is selling for whatever reason. I would look to circle out of the trade there, put it on a watch list and see if that kind of shakes itself out. If not, and all goes well, basically you are in zoom back out on this here. You are in a pattern that if you were to just do, let's see here. If you were to just look at it kind of like this, and it's got a big cut pattern here.
Yeah.
Generally, the old school technical analysis textbooks are going to tell you the depth of the pattern. Let's just say it's 146 down to let's just say kind of the depth of the cup is somewhere between 100 and let's just say 100 to 110, so 105. You've got about a 30 to 40 point bump that could happen in this stock. So that's a good way to kind of look at a profit target. Okay. So on the breakout, on a confirmed breakout, hopefully if it breaks up here, you're going to get some volume. Once it closes above 150, I would say you're probably in the clear, especially if you get a solid amount of volume. I'm guessing more institutions would probably pour into this thing if they see this breakout. If they're interested in the stock already and they pay any attention to technical analysis, everybody's going to be watching for this. So this is going to happen on earnings. It's going to go one way or the other. That's why I say tight leash since we know earnings are coming up, and if you do decide to enter the stock, tight leash for that. But then, so you've got a downside of say 15 points. You've got an upside of probably more like 20 to 25 points.
Nice. On
the upside. So it's skewed in your favor if you're long biased, which I am. And hopefully it works out well that way.
Brilliant. Well, look, I'm sure the guys, once this goes live, will be checking the video and checking the price chart and seeing how it got on, especially considering, earnings are around the corner, so it could do anything. So, look, Trent, thanks once again for coming on the show. It was fantastic having you on the podcast and now having you on the YouTube channel. What's the best way for the viewers here to get hold of you?
Yeah, sure. So I'm active on financial Twitter at Omaha Charts, and then omahacharts.com is the website. You can email me anytime or tweet at me at Omaha Charts or Trent at omahacharts.com. Thanks a lot for having me, Ken.
Brilliant. No, it's a pleasure.